Hey guys, it's Kevin Correa of Team Core Real Estate, just checking in here Friday afternoon. Just had another first-time buyer get their first home today. Very happy for Christina and Roberto. I want to say congratulations to them. Check out our new posts with them in it. Also, it's Friday, guys. Most of you getting paid. Don't go out and blow your paychecks. Our video is about credit repair tips. So before you go out and spend, always think about it. Do you want this or do you need this? So the need is something you have to have or your life's going to end. What do you need that much so the life's going to end? Probably not much, guys, besides food and water. So make sure before you go out and blow your paycheck this weekend or waste your money, think about your credit, guys. The credit affects your whole entire life. It runs everything you do. It costs you more money on your car insurance. It may stop you from getting a cell phone, a bank account, getting a new credit card, getting that car loan or a house loan or anything like that. So always think about your credit before you go out and just blow money. If you have old collections accounts, maybe it's time to settle them. So the first tip we'll go over here today is settling old collections accounts. So most accounts you can call the company and say you want to settle it. So that means pay them off for less than what you owe. And so, for example, if you have a $5,000 credit card, you might be able to settle that for $1,000 or $2,000. You're just going to want to make sure you get a receipt and you get something in writing that they accepted that, and it's going to be settled in full once you make that payment. So that's tip one. It's an easy way to fix your credit, get it back up and running. And then you want to rebuild, guys. Rebuild with a secured credit card. You can get them at DCU, John Doe Credit Union, any small bank. They have secured loans and secured credit cards. You want to get this to show that you get back on track and you can make payments on your new credit. The biggest one that affects most people's scores and they don't even know it is called credit utilization. So it's the amount of credit you have on your credit card. So if you have a $1,000 balance and you got $1,000 used, you're at 100% utilization. Worst thing you could ever do for your credit is to use 100% of all your credit card. So if your limit's $200 and you use $200 on that credit card, you're at 100% utilization. You always want to be under 25%. So if you get a $200 card, you want to be under $50 at all times to show that you're using less than 25% of the balance. So lenders and prospective people that are going to let you borrow money know that you can afford the bills that you have and you're not overextending yourself on your cards. Doesn't matter if you have a $10,000 limit and at 25% or a $200 limit at 25%. It's the same exact ding to your credit if you're at that 25% or above. So always keep your cards under that 25% if possible. And the last thing a lot of people do is they pay off all their credit cards and they're so happy and they cancel them. Canceling and closing your accounts is bad. It decreases your credit score. It makes the lenders think you can't afford your bills and you can't trust yourself to have those credit cards without using them. So make sure you always, guys, never cancel the credit card. Cut it up, throw it away, do whatever you got to do, but don't cancel the credit card. Just don't use it. So don't close that account. So if you have any more questions or if you need help on your credit repair, reach out to us. I'd love to give you free advice and help you out and achieve whatever financial goals you're looking to achieve. But don't let credit hold you back any longer, guys. Talk to you soon and have a great weekend.